There are two biggest obstacles in crypto that keep you from massive gains: the fear of red and the greed of green. If you can master both, you're most likely to make it in this space. In this video, I'll break down exactly how you can prepare for the next inevitable crypto dip and come out on top. Trust me, dips are where the real money is made, if you're prepared. Before we dive in, let's take a quick look at the current market conditions. And hey, don't forget to hit the like button. It really helps the channel grow. Bitcoin is currently hovering around $96,000, comfortably above the bull market support band. The others found support at the $330 billion mark, and now it's hovering near $350 billion. This chart tracks the total market cap of altcoins, excluding the top 10 cryptos. It made a strong bounce off the 21-week EMA during the crash. Bitcoin's dominance is holding steady at 58%, while the alt season index is at 43, indicating that altcoins are still waiting for their turn to take the spotlight. Alright, let's get started. So, how to be prepared for the next crypto dip? The first and most important step is keeping at least 10% in stablecoins. This is a golden rule I've stuck to for taking advantage of dips. Always have some dry powder ready. During flash crashes, having stables not only keeps you calm but also lets you grab altcoins at a discount. Without a stack of stablecoins, you might be tempted to sell your current bags to buy back cheaper. In most cases, you'd end up buying higher when the market sees a sharp recovery. Remember, the goal is to be a buyer during panic, not a seller. Having stablecoins on hand is the only way to do that. Shave off profits during heated rallies. If you've been watching my channel, you know I always stress the importance of taking profits when your positions are significantly up. But most people keep chasing that next 2x and end up giving away all their gains. Greed is the killer here. Here's what I do. During heated rallies, especially when funding rates are high or other local top signals start flashing, I trim 25 to 30% of my positions, especially from lower cap altcoins. These tend to get hit harder when the market corrects. I made a full video on my strategy for taking profits during the previous altcoin rally. That's when I sold Injective at $28 and rotated into Bitcoin. It dumped to under $20 during the recent crash. That's a 30% correction. By doing this consistently, you're not just reacting to the market, you're preparing for its next move. Here's a simple profit-taking rule I follow. If you're up significantly on an altcoin, don't get caught up in the up-only zone. Sell some and let a partial position ride. Let's say an altcoin does a 4x. Sell at least 30% of your position. Now split that 30% into two parts. 50% into Bitcoin and 50% into USDT. The Bitcoin portion keeps you in the market so you can reinvest if there's a dip. The USDT portion acts as your insurance policy. It goes straight into your final exit stash, untouched until you're ready to cash out completely. This might sound simple, but trust me, it's not. Greed will tell you to hold out for more, but this strategy locks in gains and protects you in worst-case scenarios. Watch local top indicators. One of the best ways to prepare for a dip is to know when a local top is forming. Here are some indicators to keep an eye on. Altcoin Index. This index shows whether the market is favoring Bitcoin or altcoins. When the altcoin season index crosses above 75 and holds that level, it typically signals a strong altcoin rally. That's often the ideal moment to start taking profits on your altcoin positions, as a pullback could follow once the momentum fades. Funding rates. Elevated funding rates indicate excessive bullishness and leverage in the market. When traders are paying high premiums to maintain long positions, it's a clear signal that a correction may be near. High funding rates often mark the end of overextended rallies. Fear and Greed Index. Extreme greed is a classic warning sign of an overheated market. When this index reaches high levels, history has shown that a correction is likely around the corner. When these three indicators are all signaling caution, it's time to assess your portfolio. Start trimming your high-risk altcoin positions to lock in gains. If you want to stay in the market but reduce risk, consider rolling some of the profits into high-cap altcoins like Bitcoin, Ethereum, or Solana. This approach keeps you exposed to potential upside while significantly lowering your overall risk. Set stop-loss orders. Flash crashes can hit without warning, and if you're not actively watching the market, they can wipe out a big chunk of your portfolio. Stop-loss orders act as your safety net. While I don't recommend leaving large positions on centralized exchanges, this is a solid option to limit the downside. Some decentralized exchanges also now offer stop-loss features. Setting a stop-loss order helps you stay calm and lets you sleep at night, knowing you're locking in gains if the market drops. It's especially useful when there's a lot of froth in the market and you're expecting a pullback. Psychological preparation. Panic selling is natural and it takes time to overcome it. Experience helps, but education is key. Learn the history of crypto markets and understand that crashes are part of the cycle. Check past charts to see how deep corrections have gone and how quickly markets have recovered. Often, a week of dumping is wiped out by a single god candle. Have a clear strategy for buying during dips, including what to buy and at what levels. This removes the emotional aspect from your decision-making. Dips are inevitable in crypto, but they don't have to be scary. If you're prepared, they become opportunities to grow your portfolio and stay ahead of most of the market. By following these steps, you'll not only survive the next dip but thrive in it. Be sure to check out my other bull market strategy videos if you haven't already, and get ready for the next big run. See you in the next one.